Are you getting started with the infinite banking concept and you've heard that you should be building a system of policies? Today we're going to talk about building your banking system and what the best method is to make your system as efficient as possible. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
For the best advice on controlling your cash flow, be sure to subscribe to our channel and don't forget to hit that bell to be notified when we upload new videos twice every single week. When getting started with the infinite banking concept using a specially designed whole life insurance policy designed for cash accumulation, it could be confusing. How do you get started with building the system of banking policies? Do you start with a big premium or a small premium? In our latest YouTube video, we talk about getting started with where you are and building up your banking system to leverage down the line. We'll see you there. When it comes to starting your banking system, the most important piece of advice that I give people is to start where you are. Start with whatever budget feels comfortable for your situation at the time. Ideally, you want to build this banking system, and a system of banking has multiple branches or multiple policies that are accumulated over time. But it doesn't happen overnight.
But the key is to start at a place that's comfortable for you financially, and more importantly, is something that you can utilize, because the more you use it, the better it's going to get. Like Nelson Nash said, anytime that you can control the financing function in your life, you win by default, because everybody else is being controlled by the system. If you're in control of the system, you win by default.
Leave us a comment down below. Do you currently have a life insurance policy designed for the infinite banking concept, or are you just thinking about getting started now? How do you plan on using the policies? I got my first policy as soon as I graduated from college. And naturally, I didn't have a job yet. So my policy was only $200 a month, but that was starting where I was at the time. Over time, however, I've built more and more policies into my banking system and leveraged them along the way. As we build up that policy and that policy ages and matures, by design, actuarially, they become more and more efficient. During the early years of the policy, let's say I had access to 50% of the premiums that I was paying. However, over time, and as that policy has matured, I have access to more than $1 for every $1 of premium that I'm paying. You see, life situations change. I started earning an income, and then as my income has grown, I've been able to purchase more policies because ideally we want to be saving 20% of our income. However, as our income changes, that's a moving target. And so it's important to build that system to accommodate and save efficiently along the way.
But not only does she have access to more and more cash, but now she's making the rest of her money more efficient because she can utilize that money, leverage the cash value that she has to make the rest of her money more efficient. For example, when she wanted to buy a car, instead of paying cash for the car, she borrowed against the life insurance. She was able to maintain control of her cash, and now she's making a monthly payment back to the insurance company.
And that's important because now I have two hoses filling up this policy bucket. I have the premiums growing and accumulating the cash value, plus I have the policy loan repayments reducing the lien on my cash value so that I'm growing my cash value exponentially. Consequently, the next time I want to go buy a car or put a down payment on a house, I'll have access to more cash value within my policy because I'm playing honest banker.
And here's another analogy. If you're doing business with a commercial bank, you are flying into a perpetual headwind. But when you control the financing function in your life, you're creating a perpetual tailwind.
So naturally, we start off by insuring ourselves and maybe our spouses. But over time, it may make sense to build a banking system to include your extended family and your children so that you have multiple lives insured. And that creates a windfall into the family banking system and allows you to create generational wealth within your family. If you'd like to get started in creating a tailwind instead of flying into a headwind, check out our website at tier1capital.com to schedule your free strategy session today. Or if you'd like to see exactly how we put this process to work for our clients, check out our free webinar, The 4 Steps to Financial Freedom. Also, if you like this video, be sure to check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.